Technical difficulties.
It is, right? Did I? Okay. I think the old one is out there, but let's see if people come back in because I think I did end it.
Yeah, I think my mom commented and said what happened.
Yeah, see, I see numbers back on there again. Cause I
Yeah, I think my Okay, there we go.
yeah. So we're back. Sorry about that technical difficulties. I'm trying to make sure I can see the comments, but I'm not gonna stop it again. I'll just read the comments off of my phone so y'all can hear us, and that's the important part. And if you have a comment, I'll just read it off my phone. And unless it just happens to appear on here, which would be great. But anyway, tonight, welcome to the Dr. Dare Show live on Facebook, YouTube. We will be talking about insurance, a topic that we don't like to normally talk about because, like Tino was saying earlier before I disconnected, is that a lot of people connect insurance with death. And, unfortunately, it is something that we will all have to face one day. And so we do want to be prepared so that we won't leave our loved ones stranded with paying bills that we left behind. But I'll let Tino talk about all of that stuff. So welcome, welcome, welcome. I see the numbers going back up. So even though we can't see your comments on here, I can see them on my phone, and so we
I
are
pulled mine
good.
up too so I could see them on
You
my
can see
side
them
too.
on. Okay, and I'll read them out, Tino. Oh,
Okay.
wait a minute, wait a minute, wait a minute. It worked.
Oh, okay, I see it.
Yeah. Hey, Karen. It did work because I disconnected them and put them back in place. So, hey, Karen, thank you for commenting. We can see she's on YouTube though. People on Facebook, please make a comment now to let us know that you can see the comments, and that will be perfect. But when you come in, let us know how your week has been, and we will get started once everybody gets back on. Karen, how was your week? Even though I just saw you, how was your week? Um, And again, we have Tino Brockington. He's going to be talking about insurance momentarily once everybody gets in. I started a little early because I knew there might be technical difficulties because we normally don't start to 8:40, so we're still good because it's only 8:36. So come in when you come in, click like, click share, and let us know how your week has been, and we will go on momentarily. And Tino, you're in Virginia. No, you're not. You're
I
not
am
in
in
Virginia.
Pennsylvania, Pittsburgh.
Right. How's the weather in Pittsburgh? In Atlanta, it's really nice. It's a little cool, but it's not too cold. It's perfect weather.
We actually had a pretty good day today. It was probably about maybe 60 degrees, 60, 65 degrees, which is good for this time of the year here in Pittsburgh.
Oh yeah, cause y'all get really
Really,
cold.
really, really cold.
Oh no, you can have
Like
that.
really,
Thanks.
really cold. Get to the negative someday,
Oh
sometimes, yeah.
no, 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 no. Okay.
Hello,
See.
Karen.
So hey Jenny, hey Tanil. Busy. Tanil said you had a busy week, and okay, we're back on. Yeah, I disconnected Facebook because I was trying to get the comments to come up, but there's YouTube is good. Facebook, and I might try it
But
again.
I can see them on my phone,
You can see
so
them on your phone.
yeah, I can
Okay,
see them
so
on my phone. So I think we'll be
and I
fine.
can see them on, yeah, and we can just see the YouTube. But if you have a comment, don't hesitate to put it because Tino has it on his phone and I have it on my phone as well. And so, again, welcome to the Dr. Dare Show live on Facebook and YouTube. We are going to be talking about insurance, and our guest is Tino Brockington, a life insurance agent.
Life, health, insurance, and annuities.
Oh, so you got all of that under
Yeah,
your
yeah,
umbrella. Okay.
yes.
And he's gonna talk about insurance. And so for those, if you have any questions, go ahead and post your questions. If you hear something that you want to ask or get more details, just ask Tino. There's certain things that he is limited to talking about. And so if we get into one of those topics, he will let us know. And you can email him. I put his email up earlier. Let's see if I still have it. I do. And
Yes.
so it's on the screen now. So if you want to ask him additional questions and be more specific about something you have questions on, his email is on the screen right now, tino.brockington@gmail.com. Of course, and you can follow him on Facebook if you need to, or if you need to get in contact with him through me, you can do that as well. And so we will be talking about insurance. And um, yeah, we have 1 minute before we start. And so be thinking of your questions. Welcome, welcome, welcome again. We haven't started yet, but we're starting in about 1 minute. So let us know how your week been. Let us know you're here, so that we can know that you're here. You make sure. Okay. Hey Carlotta. Hey Bessie. Hey Tanil. What happened was I disconnected Facebook because I wanted to see if I could get the comments to appear, because that's what StreamYard told me was a fix. But it only worked for YouTube, which is fine. But we can see your comments. So if you're making comments, I have my phone and Tino has his phone as well. Yep. So it is 8:40. Again, this is Tino Brockington, my nephew, but also a life insurance agent. But he's gonna tell us specifically what that is, because I know I keep screwing up that title. But without further ado, we'll let Tino take the platform, and then if you have any questions, just send us the questions, and I will read them out. Um, yeah, so let's get started. We have good numbers on here now, so we're good. You ready, Tino? It's all yours.
Yes. All right. Um, so I see we do have a question, but I'll introduce myself. For those that don't know me, my name is Tino Brockington. I am a licensed life insurance agent in Pennsylvania. Um, I am have a pending application in Virginia, so Virginia will be my next licensed state. Um, but a little bit about myself. I'm happily married to my wife, Delisha Hozowski. We have 3 little children. Um, Jacob, Julian, Dallas. I didn't say them in order, but those are my 3 babies. I just got back into the insurance field. Those that know me know that I practiced insurance probably a little over 10 years ago. Took a break to develop, my own business and things like that. We transitioned to Pennsylvania, in which we established ourselves here about 7 or 8 years ago. And just over the past couple of months, things just kind of shifted, with the moving industry. And I decided that, this would be a good time and a good fit for me to get back into the insurance industry, because I've definitely had a passion to get back into the industry, because I enjoy helping people, honestly,
Cool. Yeah.
providing great value. And especially not to, bring too much race into it, but, especially, people of our skin color, being
Right.
able
Right.
to provide that information to us unbiased, or not necessarily judging from a non-judgmental standpoint, to where nobody's judging you, and you're really getting offered the things that you need, services and levels of insurance, or whatever the case may be, information as well that you need, because a lot of times information is not provided to us, or the lack
Right.
of understanding. So a lot of these things we don't engage or indulge in because we don't necessarily understand them.
Right. Do you
So
find that in our community, that's the one of the biggest issues, is that we don't have the knowledge, or we're not being
for
provided the
sure,
information
for
on
sure,
insurance?
for sure,
Because
definitely.
I know when I hear the word insurance, I'm like, I don't understand that. I mean, now I do a little bit more because I work
Right,
in insurance, but I can understand like just the daily person just going like, this is
right.
a lot,
So I mean,
you know.
so I'll give a general definition of how insurance works. Insurance is the transfer of risk. So risk, we know what a risk is. A risk is any unforeseen event that incurs or causes a loss to you. So and the risks have to be definite to us. So like, it has to be a risk in which there's no potential for you to gain, or it has to be a definite loss for it to be insurable. So like, Um, so like I said, insurance is a transfer of risk from one party to the other, and then the way that pricing and things like that'll work is it's pooled together. So groups of individuals, they're pooling your risk together, and that's how they calculate your rates. Um, so it was just general, understanding of what it is. So that's how you're able to have a policy that'll pay you so many odd dollars, and you're only
Hmm.
paying a small amount of money per month,
Hmm.
because all of that money is being pulled together from all of the individuals contributing to this um, insurance plans, to this insurance company, and they're pooling your risk. And whenever a claim is made, then
Okay,
the
so
risk amount.
what's an example of a risk, I guess, for
A death, car accident,
okay.
sickness, illness, let's think, what else? I mean, all types of things, are
That
risk.
okay. That makes me understand it more. So it's like,
Right.
okay.
Your salary is a risk. What else? I mean, it's a lot of things that that can be assessed, that could be at risk if something was to, or unforeseen was to happen to you.
Happen. Okay. So that's basically what it is. It's like this risk is if something happens to you, this insurance is going to support you during that
If
risk.
it's a covered, you
If it's a
know,
covered
r-
benefit or risk
covered
or
risk,
whatever.
right? If it's a
Gotcha.
covered risk, right?
Gotcha. Okay. And so you were talking about like so when we pay insurance premiums or whatever, is that going into like a pot or is that just your insurance?
So
Am I making sense?
yeah, you making sense. So
Okay.
when you do pay an insurance premium, a portion of that insurance premium, depending on what type of insurance policy it is,
Okay.
it goes to the cost of insuring you. So based on whatever company it is, whatever risk assessments that they've utilized to calculate their rates, that determines what your cost is to insure you.
Okay.
Um, so from there, that's how they determine, okay, this is the cost for your insurance, and then whatever your premiums are, that all goes towards that. Some policies, though, you pay a little bit more than what it costs to insure you, and therefore, the excess goes into what a pot in which they call cash value. And
Oh,
that cash value, sometimes it accumulates interest, um, depending on what type of insurance policy. So there's different types. You have term life, you have whole life, you have universal life insurance policies. Um, and the difference between the two, term life, the word term is for a period of whatever designated period of time that it's offered for. That's how long you're covered for. So they usually range 10, 20, 30 years, are usually like the ranges. And then you have whole life insurance policies. Those policies are exactly what they say. They cover you for your whole life as long as you pay those premiums. Um, and typically, once you're qualified, those premiums usually are pretty locked. You're usually locked into a rate, no
okay.
matter what happens. So if your health condition was to change later on down the line, as long as you're continuing to make your premiums, you're locked in. Your rates can't go up, and things of that
Okay.
nature.
Okay.
With universal life, pretty much operates similar to a whole life, except for the difference is the excess premiums, or your cash value premiums, instead of them being guaranteed to a certain degree, they are
Okay.
invested into markets, into they're invested, and
So
from
that's
those
almost like a
investments,
bank, like how bank when you put stuff in savings with the bank and
right,
stuff, they're
right,
doing stuff with your money that we're not aware of, but when
right,
you need it, you have access to it. But
right. And you're
gotcha.
safeguarded. Some they have guarantees usually where if the markets don't make whatever, then you're guaranteed an amount, a return on your money.
Okay. So
Um,
did I get that right? I typed that out really quickly. Term is there is a period of time.
there's a
Whole life
time
covers you for your whole life if you continue to pay your
pay the
premiums.
premiums, correct.
And then universal life is similar to whole life, but they are taking those premiums, I think, and
The
investing
excess and
the
investing it
excess.
into
Okay.
in the markets. And then
Okay.
you have different ones. You have index and you have variable ones where the index ones typically are investing in safer markets or safer investments,
Okay.
where the variable ones are a little more riskier, in which the more risk that you take when you're dealing with investments, the potential for higher returns, but at the same time, it's a potential for, a higher loss as well.
Gotcha. Okay. I'm trying to make sure we're still live. I think we are. I see the numbers. Do you see people moving on your phone?
I see.
Because it seems like it's frozen on my phone, but
No, I see it's still going.
it's still going. Okay. Okay. Oh yeah, I see it now.
There we go. So let's answer my mother's question, Jennifer Brockington Wesley. She said, "What's the best age?" Well, she asked, "What's the best insurance policy type to get?"
I
So
saw that.
after going over, the different types, it really would determine or depend on what you're getting the insurance for. Um, so different things kind of will spark the need for different types of insurance policies. So, for example, term policies are typically geared more so towards protecting higher risk during a shorter period of time. So, for example, like if you're making payments on a large item, and you don't want to necessarily, if something was to happen to you, you don't necessarily want to part ways with that item. You want that item to stay with your family. Therefore, you would purchase an insurance policy to protect you and that asset or whatever the item is.
Okay.
So that if an unforeseen event was to occur, that item could potentially stay within possession of your family, based on
So
the insurance.
what's an example of
So
something that
a
somebody?
home purchase, a home
Got
purchase,
Okay.
trying to keep it general, but if you were to purchase a home, so buying a house, typically you have a large mortgage,
Gotcha.
in which if something was to happen to you, 9 times out of 10, or whoever's the breadwinner, or even if there's a two-party, purchase,
Yeah.
and if something was to happen to one party, the other may not want to leave that particular
hmm
place that you all have established with each other. You may want to hold
Right.
on to it, or if you do decide you want to do something else, um having something there in place to protect that investment will give you more freedom, power, peace of mind during
Well,
that
that makes sense.
transition.
Okay. So that's term. That's a term.
Typically, right. So that's why I
Okay.
said times usually range in 10, 20, 15, 30, whatever. There's different
Gotcha.
metrics that, and they
Yeah,
usually, you want to get one that'll usually align with whatever that debt is.
that makes sense. Okay.
But typically it's usually, for assets. So things that will gain value, over a period of time. So a home purchase, you might not necessarily want to get a life insurance policy to protect the car, depending on what type of car it is.
Gotcha.
But
Unless
I
you
mean,
paid a lot of money
right,
for it,
unless you
right?
paid a lot of money for it. But I mean, it wouldn't necessarily hurt, you know what I mean? But at the same
Mhm.
time, that's not necessarily, but it's more so for things that, will hold their value for a long period of
Yeah,
time that you
because a
don't
car
necessarily want to lose.
depreciates after a certain
Right. It
amount of
depreciates
time.
over time.
Right. Right.
But
Okay.
again, with life insurance policy, you can have a life insurance policy that also decreases over time to match um, the decreasing obligations. So, like I said, there's so many different flexible ways to position, a policy
Mhm.
to match whatever your needs are. So it really just depends on what your needs are, that would determine what's the best.
Okay. So I see Bessie had a question. She says, "What is the price for children age 8 and 10?"
Something like that, we would definitely have to have a more personal conversation about, in regards to actual prices. But what I will say is there are a ton of plans and policies in place, for children, but there are limitations, I believe, on the amount of insurance that you can place on a child, just because of they don't have too many obligations, or
hmm
um, and it's a safeguard thing too, to kind of protect people for over insuring.
Over insuring. Okay.
Right.
Why would people over insure? What? I know why, but I want
Right, right. I mean, to potentially fraud,
Gotcha.
fraud is what it would be considered.
Gotcha. So, how would somebody who knows nothing about insurance, what would you suggest they do to start off by, say, if they wanted to purchase life insurance, or I don't know, what would you
Um,
suggest?
I mean, the suggestion would be definitely reach out to a licensed agent, and sit down and have a need or conduct a needs analysis with that individual. So that individual will do a risk assessment. They will ask you a series of questions, um, ultimately to determine what your insurance needs may be.
Okay.
And then from there, you would transition to affordability, and determine, okay, now, can I afford um, to pay what pay the premiums that it would cost to cover these risks.
Okay. Let's see if there's any more questions. I saw that one on. So,
See,
what if somebody oh, you see a question? Okay.
my mother again. What's the best age to start getting life insurance? Honestly, as soon as as soon as possible. Definitely, it's really not a target age. The younger you are, the better, of course. To lock in lower premiums ultimately, um, and also too, it's a good way to establish something um, for yourself as far as, let me say, because I don't want to necessarily call it like an investment, but to a certain extent, it could be considered like some type of form of, you investing in, because it's something that, like we said, it's inevitable. So um, you're making plans and preparing for something that is for sure going to um,
Happen.
happen.
Mm-hmm.
So
Okay.
the sooner
Karen
you
has.
prepare for it, the
Oh, go
better.
ahead. Sorry. I put
No,
Karen's question on the screen. She's on YouTube, so we can see her comments. When you don't have children, is it sensible to have a sibling or a niece nephew as the beneficiary?
um, yes. I mean, beneficiaries totally would be somebody that you trust, will pretty much handle your business according to your desires. Um, Most importantly, definitely put in place a will that would safeguard any of those uncertain feelings that you may have, um, to make sure that whatever your plans are executed to your desires by putting a will in place, regardless of who that beneficiary is. They still are obligated to operate based off of what your final statements were.
Okay. And so Jenny says, once I stopped working, I didn't have insurance anymore. So now I'm in need.
So I mean, that's another thing too that a lot of people don't necessarily consider, and we think because we get life insurance policies or things like that, insurance policies through our jobs, that we're covered. But a lot of times those policies don't necessarily transfer with you after you leave those places, and if
Oh,
they do, you're not necessarily guaranteed the same rates that you were getting when you were still at that organization, because you were paying a group rate. Once you leave that group, you then convert into an individual rate, which is going to be
right.
assessed a lot higher than what it would be for that group.
So that brings a question to me. So if you have insurance with your company, should you have an additional individual policy for yourself, even if you are working with the
I
company?
I would highly recommend you obtaining your own personal policies outside of your company. Yes, having those benefits at work are great, but at the same time, you want something that you have ownership of.
True.
To guarantee that I know that I have something
To
for
fall
my
back on
family, or
for
to
my
fall back
family.
on, whatever the
Right.
case is, um,
Right.
and not
That's a
solely
good
dependent on that.
that's a good point, and I'm glad y'all asked that question because I didn't know that. I just thought, hey, I work for this company and I have insurance with them.
The only thing that typically transfers or that will leave with you, without any, I'm not gonna say without any penalties, but the only thing that will leave with you would be health insurance because of the
Cobra Act,
Cobra Act.
right? Right.
But at the same time, your rates are still not
The same.
guaranteed the same. You're gonna
But
be paying.
doesn't Cobra have a run out time, or is
Yeah,
it
there is a period of time. So I
okay?
don't know exactly what that period of time is off the top of my head, but there
Gotcha.
is a period in which they are required to give you the option to be able to continue that after you leave that place of employment.
Gotcha. Okay. What about if someone has like a health condition? How does that work? Because I know there's some stipulations when people are being assessed for life insurance, all of that type of stuff. And I don't know how much you can get into that piece, but that's a
We can't
question.
really get too deep into talking about health issues, but at the same time, there's different companies have different of course underwriting definitions. So
Mhm.
it would solely depend on what company and what type of policy you're applying for would
Okay.
determine what are the health stipulations. There's a lot of policies nowadays that are guaranteed issue, which means that no health exam are required. Pretty much they just evaluate your medical records, and based on those things, they make a determination as to whether you're insurable or not.
Gotcha.
If they aren't able to make that determination based on those things, then additional medical records or additional efforts will be required. Maybe a blood draw or an exam from your physician, things like that.
Gotcha. Okay.
But those are typically for individuals who may not be in the best of health.
Gotcha. Okay. And again, welcome, welcome, welcome to the Dr. Dare Show live on Facebook and YouTube. If you have any questions, feel free to ask. We can see your comments. And we are talking about insurance, trying to make this a topic so it's not so hard or complex or convoluted, but it's just something. And Tino's here to give us information. If you do need to talk more in detail about certain policies or things like that, or you have specific questions that you may not feel comfortable talking about online, I'm trying to go back and find Tino's email if that's okay that they reach out to you.
Sure.
um there we go. It's tino.brockington@gmail.com. So Jennifer says no, because when I stopped working, uh because because money was coming out of my check, I lost that, so I should have indemnity or some other insurance if something does happen. But you have to check on that, right? You would have to check to make sure that you still have some kind of insurance coverage after you leave. Usually they give you
So,
Cobra, right?
so I understand what
Okay,
she's
go ahead.
saying. So some policies they have especially when you start talking about health insurance
Okay,
and things like that, they have caps or policy limits. And ultimately once you get to those policy limits, your coverage is terminated at that point. So in certain scenarios, you can potentially run out of money in a claim and would need to possibly fall back on something else. So what she's mentioning is indemnity insurance, or which is we see the little duck here, Aflac. That's one of their main policies that they offer is indemnity insurance. And what an indemnity policy does is unlike your traditional health insurance policies where they pay doctors and the hospitals
okay,
and things like that. These
okay.
types of insurance policies make you whole um, if there's any type of loss of income or things of that nature.
They make
Um,
you what?
they make you whole, so they compensate you.
Oh, okay.
They don't pay the doctors. So with Aflac, there's different policies in which there's accident, there's different policies where during different coverages or different losses are um, compensable to you as the policyholder, to
Hmm.
where you can file a claim and that claim will be paid directly to you and not to a doctor. So
Okay.
so like she mentioned, in those scenarios, something like that will potentially help if you did have continued care that was necessary. Um, but these policies are really not necessarily designed to pay hospital bills. It's kind of like a fill the gap type thing.
So
Um,
indemnity, you're saying the
right.
indemnity.
Yeah, they're not necessarily designed to cover any type of major medical expense whatsoever for the
So they're
most
just
part.
like a filler. Is that what you're saying?
Right,
They're kind of
right.
okay. Okay,
It's just like a fill in the gap, like
gotcha.
gap
Gap
insurance.
insurance. Gotcha.
Right,
Okay. And so you said they compensate you instead of like any organization or anything like that.
right.
Okay.
And they do offer some policies now that I believe are network policies where you actually are comprehensive to where they do actually pay the doctors and hospitals and things of that nature. Um, but for the most part, most of their traditional policies are going to be indemnity policies where the policyholders are paid directly for any losses that were incurred and claimed
Okay. Okay. Any
or
more questions out there?
covered
Go ahead.
losses. Let's add that covered losses.
So any more questions out there? So if somebody wanted to, oh, you already said this, but if somebody wanted to start to get an insurance policy, the first thing they should do is reach out to a licensed insurance agent
Correct.
so they
So,
can.
right.
Okay, go ahead.
And myself, you can reach out to me if you decided you wanted to move forward with insurance. And if I'm not licensed in your state, I could get licensed in your state, or I could set you up or line you up with somebody who is licensed in your state um, to help you through that process. Um, One of the other things I wanted to talk about too was baby boomers. So baby boomers, I don't know if we all know, but baby boomers, I believe the statistics say that there's 10,000 people turning 65
Hmm.
every single day. And one of the things that we don't necessarily think about as well is long term care, which is pretty much
Okay,
care in some type of skilled nursing facility, a nursing home,
gotcha.
home health care, being cared for at your home, those things like that. So with the baby boomers, a substantial amount of people turning 65 every
65.
year, it's
Okay.
going to put a huge toll on our government and Social Security, Medicare, Medicaid. It's going to put a huge toll on those different departments.
Uh huh.
Therefore, I do recommend those who are capable or able to look in to long-term care. I highly recommend you look into it because statistics show that 70% of individuals over the age of 65 will need long-term care at some point in their life.
In their life. Okay. So what do you
And
mean you recommend? What is there a type of insurance
so
policy
there
that?
is a type of it's long-term care insurance. And pretty much what those types of policies do is they provide funds to cover those different types of stay. So if you needed care or those different types of care, so if you needed skilled nursing care, if you needed like I said, nursing home, like a nursing home facility,
Mm-hmm.
if you needed care at your home where you were bedridden, things like that for an extended period of time, those long-term care policies kick in and pretty much give you the ability to not necessarily have to take what you can get, kind of puts you more in control of you being able to decide your particular care based on whatever allocations that you decide or take out, with that type of policy.
I'm so glad you brought that up because that's really needed because I mean just me myself knowing a lot of people that the older people had to be put into like
Right. I mean,
long-term
even
care.
our family members,
Right.
right. A lot of
Right.
our family members at some point have been in that position in which they've needed some type of assistance,
Right.
additional medical assistance outside of the hospital.
Right.
Uh, so
And so are those and I know you can't get into details, but are they expensive to get? Or are they hard to get those type of insurance policies?
it's that's really hard. That's really hard to say. That's something definitely you would just need to really just kind of like look into and shop. There are options, of course. So you aren't necessarily just confined to just one, company. Of course, there's many of
Gotcha.
options for you to,
Gotcha.
shop around and make the best decision for you.
That's a very interesting topic. Jenny had a question. I think she she says if someone needs insurance after something happens and they're in a serious situation, they may lead to something critical. Could they get insurance?
So, typically when you enter into those types of scenarios, if there are companies that will still potentially insure you, they are going to have a I don't want to call it I don't what's the term? It's going to be like a blackout period where
Okay.
ultimately during if something was to happen or if death was to occur within this portion or period of time, they aren't going to pay whatever that death benefit amount was. They're just going to return you your money back.
Mm,
So that's why it's definitely highly recommended that you obtain insurance while you are knowingly healthy and young.
hmm
Because that's typically one of the reasons why a lot of people don't necessarily, because you wait until something happens and then you want to go. It's not necessarily a reactive thing. It's a proactive thing.
So
Something
you
that
need to do it before
you
when
need to
you're
do it
healthy,
before.
when
Right,
you're
for sure.
gotcha. Yeah. And I think that's why I asked that question earlier about somebody having an illness or something like that, how hard
Right.
and difficult it is. Tennille says, thanks for bringing up the long care insurance. I know, Tennille, Tony, I was just saying the same thing and Tony said she will definitely look into that because I
Yeah, for
think a
sure.
lot of people don't
It's
know that.
something it's something that we definitely don't really think about. But after it being brought to my attention and I thought about all my family members, I was like,
Right.
I mean,
Because we
like
have had a lot
a
that
lot. Like,
needed,
yeah, I mean, right.
and it can happen to anybody at any moment, you
Hmm.
know. Now I know a situation, and this you don't have to address this at all, but I know a situation where someone was put into a nursing home, and all of their money, the nursing home takes all of the money, and I don't know if that has anything to do with insurance or not. It's like,
So I
okay,
can't really get into too much detail, but the
right,
way that it works is once you do enter into these facilities, if you are receiving any type of money, your money is going to go towards what it costs for you to receive that care
gotcha.
first. If there's any excess, then you may get the excess, but
It's
your
all
money
about
is
taking care of you in that
right,
facility.
exactly.
Okay.
So that's why these long-term care policies, they would protect, kind of safeguard you from that type of scenario where,
Oh, that's really
you know what I mean? Because that money is going towards covering that expense.
so you still have whatever you're getting from whatever
Right,
you still
right.
have. That's a good. Okay.
Another thing too is when you are eligible for Medicare or Medicare, I believe one of the stipulations to qualify for long-term care through Medicare or Medicaid, you have to pretty much liquidate all your assets. You can't have more than a certain amount of assets to be eligible. Um, so that's why a lot of people they go through a spend down, or like you said, the nursing homes pretty much will exhaust their money. Once that money is exhausted, then they're eligible for Medicaid, and then Medicaid will kick in and start
That's
covering.
probably what happened. Yeah.
But also what happens at that point, depending on what type of facility you were in, that facility may not be eligible under Medicaid, and so therefore you may have to move to a different facility. Different facility.
Wow.
So that's why I said that's why it's good to look into the long term care policies because, like I said, you don't want to necessarily be at the mercy of whatever
Yeah.
your insurance company is. You want to be able to have a say so,
Say so.
somewhat of a
Because
say
I'm
so.
telling you, that situation that I was thinking of, they just took all their money,
Yeah.
they took all of it. So you couldn't have anything in your bank account. They took everything. Oh, Tony has a question. Can you get a policy to guarantee a certain level uh, of facility, or is that up to the insurance company? A certain level.
So I mean, yeah, so there's different limits, just like, life insurance and any other, there's different limits. So of course you can buy as high as you would,
Okay.
as high as they offer. And then most of them have inflation guards as well. I know in the state of Pennsylvania, it's a requirement for a long-term care policy to have an inflation guard. So every year, your benefit will increase based on a certain percentage to kind of safeguard inflation.
That makes sense. See, this is stuff that nobody talks about. Like a lot of this stuff you're saying right now, I had no idea. And
Right,
like you said, a lot of our family members went through this stuff. But
right.
I long-term care insurance, and I think I have it with my company, but
Hmm.
I'm going to go and double check. And if not, I'm going to see if I need to add that.
Right.
Is there a certain age that you can start doing that? Do you have to be over a certain age before
There
you
isn't. They usually say around 40 is usually like the target age to start
to
looking.
start look? Okay.
All right. In your early, in your younger years, it's not necessarily because this is something typically for once you reach the age
Of
of
65 or
65
older.
older.
Okay. So Bessie has a question. If you're 60 in good health, do you still have a waiting period?
And what are you pertaining to? Talking about life insurance. If you're talking about life insurance, that would be up to the insurance company. The waiting periods is typically like for individuals with, like somebody had mentioned, if you had like some severe illness, you were diagnosed with some, some terminal illness or very serious illness, is typically when those types of things are in place. They
Mhm.
have risk assessment. So depending on your health, if you're not in that category of um, going into that category of that special type of policy, which is called
Okay.
a modified. It's called a modified life insurance policy because they're altered to accommodate those special situations. Um, if you're not in one of those, then your premiums will be rated based on your qualifications. So based on your health rating, based on based on whatever that company's risk assessment is, that's how you will be rated.
Rated.
So it
Okay.
won't necessarily be a waiting period per se. As long as you're eligible, you'll be covered from the day in which you sign that application.
Okay. And so Jenny says, do all insurance companies include funeral burial?
Ultimately, the way insurance works, you can do whatever you choose to do with the
You just get a
funds
lump sum of money,
once
right?
you
You just
receive it, right? Now there are ways where you can designate portions of the money to go wherever you would like it to go. So if you wanted to allot a portion to go to a funeral home and secure that and make sure that was secure, you have the right to do so um, in your declarations when you're designating your beneficiaries.
okay. And Becky said, I mean, Becky. Bessie says, thank you.
No problem.
We're gonna have to have you back, Tino, at least like once a month to discuss. Because this is why I've created this show so that there's I have different topics going on, but just bringing information to our
Right.
community that we don't talk about. And this is one big topic that we don't really talk about. Like I'm so impressed with the long-term care thing. That's the thing that I'm taking away from this, but I'm sure there's so much more information that,
Right.
and maybe we have to, if y'all have any topics that y'all want to discuss, we'll bring Tino back if he's willing to come back. Like
Yeah,
maybe,
maybe next time we could talk about we could talk more about maybe annuities
okay.
or even health insurance.
Yeah, I
Um
think health insurance would be a good topic. And you said annuities.
okay. Yeah, we did miss that question. I do remember seeing that question. Karen or hold on.
Oh, did she? Oh,
Somebody asked a
growing
question
up, I
about
remember.
cashing in.
Oh yeah, here she go. I'll put it on the screen. Growing
Okay.
up, I remember hearing. Thank you. Growing up, I remember hearing about adults cashing in their insurance. Yeah, I do too. Cashing in their insurance policy. What does that actually mean?
Okay. So there's companies out there it's a gray area because some versions of it is not all the way. So you cannot take out an insurance policy to do this. Okay. So, but
Oh, I'm going to get an insurance policy so I can cash
right,
out this.
right. But what can be done is and it's so many ways that you can cash it. There's a couple ways you can cash it in. So depending on what type of life insurance policy it is, if it's a whole life policy, then that policy potentially may have some cash value. And what you could do is you could pull all of that cash value out of that policy, and what it does is it pretty much kills it.
So that's a whole life
Right, that's a
policy.
whole life policy. Once you pull all the cash value out of that policy, pretty much there's nothing in it to keep it alive anymore, and it pretty much dies at that point. Um, that's one way to cash in a policy. Another way to cash in a policy, some policies have riders that you can add on or additional benefits where it's called an accelerated death benefit. So if a critical illness or something of that nature was to incur, that policy would accelerate a portion of your death benefit to you to help you maintain whatever your lifestyle or whatever expenses you may be incurring during that period of time to help you sustain. So those are additional additional add-ons that you can add on to certain types of policies.
Okay.
The other thing that you could do to cash in a policy is there are companies out there that in the similar scenario, you can they will buy your policy from you and give you a lump sum of money. So what they do is they reassign your policy. You reassign your policy, so you assign them as the beneficiary of that policy, and in exchange they give you a lump sum of money. It's typically a lot less than what the benefit is from that policy, but it's an alternative to give you immediate cash if you were in.
So that's the main purpose for doing something like that is to get
Right,
the money. Okay.
right.
But
To
then you
help,
lose the policy, right?
you pretty much you lose the policy. You lose pretty much control over that policy, so it's no
Okay.
longer yours anymore.
Yeah. That doesn't sound like something. Oh, Bessie has a question. Tino, I still have
I
the
see.
first. You see it, Tino? I still have the first insurance that you sold me, Aflac. Okay,
Well, that's good to know.
right.
I just got back with Aflac actually.
Show us
Y'all want to
the
right?
duck.
So yeah.
Cool. So yeah. Well, any more questions? I don't want to keep y'all too long on your Friday evening. Thank you, Tino, for coming in and sharing this information. Again, I do think we should have you back to go into health insurance or you said annuities. You saying that
Annuities.
word? I'm like, what is that?
Well,
But
annuities is another form of a type of retirement.
okay, okay.
It's
And
kind of
that
like establishing it, just it's something that you establish yourself, but it's like establishing a retirement, but it's through an
okay,
insurance policy.
okay. And I think so how did Delisha get to her comment showing up on Facebook, but it's showing up here? I think I have to disconnect and connect the other things. Karen says, thank you, Tino. I always wondered about that. I grew up in public housing. I think cashing in insurance policies was very popular. And I've heard that too, Karen, before.
Mm-hmm.
So, but any more questions before we end this discussion? Thank you all for sharing your Friday night with us. Again, I'll be back in 2 weeks with another topic. But if Tino doesn't mind, we'll have him back to discuss more information about insurance.
For
And
sure.
then again, if you have any more questions for him, anything specific that you want to ask that maybe you didn't feel comfortable sharing or asking on this platform, you can email him at tino.brockington@gmail.com.
And I will be more than happy to assist you or guide you in the right direction.
All right. So, any more questions before we conclude this show for tonight. Again, thank y'all for joining. Thank you, Tino, for coming on and
No
educating us.
problem.
Again, I'm taking away the long-term care insurance because
That's good.
that's very
That's
important.
good.
Something I'm walking away with that I didn't think about. I probably have it, but I
Right.
think I want additional
Right. Right. For
on
sure.
that. All right. Any more questions? I'm trying to look real quick to see if I'm missing anything, but I don't think so. I see a new comment down here. Hold on. Oh, Karen says great show. All right, y'all. So thank y'all. And Jenny says she wants Aflac.
I
That's
see.
good. All right. So anyway, the numbers are climbing up. Before we leave, does anybody else have any more questions? Because the numbers are going up again, and I don't want to miss anybody. Because usually what happens is I'll close out, and then I'll see these questions that I skipped. But going once, going twice. And make sure y'all share this video on your page so that people will have this information. Um, hey, Karina. Hey, Mary Lou. I told you the numbers. Hey, Anthony. Um, go back and replay the video because we're getting ready to disconnect unless you have a question. Karina says just dropping in to say hello from work.
Hey,
Hello.
Karina.
Hello, Karina. All right, y'all. So I will not hold you any longer. Thank you, Tino, again. Thank
No
you, everybody
problem.
who joined, and have a good Friday night. Bye, y'all.